Hello, today is Sunday, and it is the 24th of June, 2012. I'll start off within this video by talking about a video that's starting to go a little viral on the internet from CNBC. Talk a little bit about the video in itself, and then transition towards basically what Operation Twist is. Talk a little bit about the creation of fiat currency, and then move into the video that I was planning on doing this weekend, which is talking about the mathematics in that of buying silver now versus that in waiting. So let's get started. The YouTube search was simply for CNBC. This was done a little after 10 a.m. Eastern Time today, and there's going to be, or as of now, there's about a dozen or so with the title stating that we are slaves to the bankers. You can see it in three of them. Three different people uploaded it. And again, you'll probably see about 10, 11, 12, maybe even more different copies. The search for date added is one that only searches the last few minutes, last few hours. So if you're trying to find something that has just been uploaded, then that's what you would search. So that's what I found. The video, of course, is this one, the top three, that is. And this person in here is the person to really notice, because he's the one that's talking about the fiat currency and the problematics that it portrays. So just a heads up, a very good video. And I've been hearing a lot lately about something called Operation Twist. In fact, the last week and a half or so, I've probably heard it on average 6, 7, 8, 9 times a day within different sources. Before the week and a half, I had somebody explain a little bit to me what it was. I never heard it, at least not remembering it. And now it just is coming everywhere. The definition for Operation Twist is the name given to a Federal Reserve monetary policy operation that involves a purchase and sale of bonds. Operation Twist describes a monetary process where the Fed buys and sells short-term and long-term bonds depending on their objective. For example, in September 2011, the Fed performed Operation Twist in an attempt to lower interest rates, the long-term interest rates. In this operation, the Fed sold short-term Treasury bonds and bought long-term Treasury bonds, which pressured the long-term bond yields downward. Let's go through the explanation of it from the same company, which is Investopedia. The name Operation Twist was given by the mainstream media due to the visual effect the monetary policy action was expected to have on the shape of the yield curve. If you visualize a linear upward sloping yield curve line, the monetary action effectively twists the end up the yield curve, hence the name Operation Twist. I don't personally need any more because, quite frankly, of what I know already about currency creation. And here's a quick little script. This is from Zeitgeist addendum. This is a transcript from 10 minutes and 40 seconds into it up to 11 minutes and 35 seconds. When the government borrows money from the Fed, or when a person borrows money from a bank, it almost always has to be paid back with accrued interest. In other words, almost every single dollar that exists must be eventually returned to a bank with interest paid as well. But if all money is borrowed from the central banks and is expanded by commercial banks through loans, only what would be referred to as the principal is being created in the money supply. So then, where is the money to cover all the interest that is charged? Nowhere. It doesn't exist. The ramifications of this are staggering, for the amount of money owed back to the banks will always exceed the amount of money that is available in circulation. This is why inflation is a constant for the economy, for new money is always needed. Again, this is just to explain that the debt is guaranteed to exist, and there's a lot of different examples one can do to just understand this, but the basic one is just imagine a small community, one bank that lends to a few people, starting off with 10,000 units. They lend off 10,000, so they're going to say charge 10%, so 11,000 is owed. Only problem is there's only still 10,000 amongst circulation. So even though some people are not in debt, the overall average or the total sum of debt is negative 1,000, or total debt's 1,000, so everyone's negative 1,000 in total in the whole. So there's a basic part of it there. Still be a little while before we go to the charts, not too much, but before we do, I'm just going to go back again to this where they admit that we are all slaves. So let's take a look at what the definition of slavery would be. This is from the American Heritage Dictionary via the freedictionary.com. And the definition states, the state of one bound in servitude as the property of a slave holder or household. The state of one bound in servitude. Now the question is, how many people are in the state of servitude? And the property is that of central bankers. The answer would be a lot of people. The practice of owning slaves, that doesn't really mean much. A mode of production in which slaves constitute the principal workforce, which of course is the labor force. But I think number 3 is the important one. The condition of being subject or addicted to a specified influence. I should say and or. Condition of being subject and addicted. How many people are addicted to fiat currency or subject to it on a heavy influence? And the answer to that would be a lot of people, if not everybody. So quite frankly, to say that we are not a slave to the central bankers would either mean that one is misinformed or unable to handle the brutal reality within this world. Okay, let's now go on to silver. As far as the big reason for getting into silver, I think a lot of it was already explained in the first part of this video. Now, as far as setups are concerned, this is not a bullish setup. It is really not even that neutral, although it is more bearish than neutral. And quite frankly, what would be smarter to do today? Would it be better to buy silver or to wait to get a lower price? And if one does wait for a lower price, then how far lower are you going to move towards? We have this chart which has a Fibonacci retracement line of 49.81, pretty much $50 from a year and a half ago, and a low of $4.05. This low happens to be the breakout lows of approximately 10 years ago, which spans the duration of the bull market. By looking at this form of the chart, when you are above the 18-period average that we state, you are in a bull market. Whenever you have these little corrections like you see in here, they are small corrections because even though it was a red candle, it still stayed above the 18 average. Therefore, when you have this type of correction in here, that was a very small pullback. And then for the last, not including this month, of course, for the last close to a year, maybe 80% of a year, it's been battling within this band, which is the neutrality band where it has its correctionary phase. Now, for the first time going back since back in here, we are going to have a month that stay below the 18 average of lows. The 18 average of lows is starting to decline, which is giving us the bearish setups. Keyword setups, which means that it's originally coming into play. This is time where markets are switching over. Question is, does it look like it's needing a deeper pullback? And there's 2 levels for a deep pullback. The first level is at around 19. The second level is about 10.5. I highly doubt that 10.5 will be a level unless the central bankers JP Morgan really wants to tick people off, or it's something that they choose to do and they can do so. After all, people have allowed the fiat currency to play in and everything that goes with it, which includes all of the financial derivatives and political control. So because it's allowed, it can be done. But it does look as if it's, to me, looking to make a move down to here. So therefore, let's just go through a mathematical assessment. And that is this. What would be better? Say you have 10,000 fiat debt note legal tenders and you wanted to buy some silver. Would it be better to buy today? Wait for $20 an ounce? And if that's the case, how accurate you have to be. Now let's assume that it is a must to turn this into silver. So by waiting now, the risk is that the prices will move higher and you won't get as much silver for your buck, as they'd say. The reward is that it will make it down to this level and you'll get more silver for your buck. Now the Fibonacci analysis I use from this high to this low states that we really need to have a clear breakout pretty much above 40, 39 even. So we'll even have to say, even for the sake that it's $41 an ounce is where you want, where you're going to buy, if of course it doesn't go lower. Almost like a stop loss, but really a system so that it ensures you to not miss the boat. If you're still new to silver and you haven't really gotten in, then quite frankly, it's an amazing time to buy, but I don't think right now that it is if you're waiting. So how confident do you need to be? Well, silver's about $3 over spot when you buy it. Right now it's about 27, so at 10,000, you would get about 333 ounces. So we'll just write it here today. Let's make this a little smaller of a font. So today you would get 333 ounces. Now if you're waiting for 20, you're still going to be probably getting $3 over spot. So we'll take 10,000 again and divide it by 23. That would be, we'll say 435 ounces, which is about 100 more. And if you are unable to get silver at $20 or it doesn't go down there, then you're going to be buying at, say, 41 plus $3 over spot. So we'll divide that by 44, which would work out to, say, 227 ounces. So now we can do our risk-reward a little bit better. So we're risking, essentially, we have 333 ounces. If we win, and silver does go to 100 or down to 20, you'll essentially get about 102 ounces. But if you're wrong, you're going to lose out on a little over 100, about 106 actually. So what this tells us automatically is that we have to be right over 50% of the time to justify not buying today and therefore waiting for the price to go to 20, realizing that if it doesn't do it and it goes higher, that you don't miss the boat and you ensure that you get in. And that's what the confirmation is all about. Finally, I want to point out that I did a quick little video on another channel. The site is activistvideos.com. This is JSnip4, Realist News put this channel up. And I still think it's in its early processes. I remember Joe stated that these videos will be deleted sometime soon. However, I've put a video on there regarding a advertisement that I seen regarding a bank, Capital One MasterCard. That video will be available on the other channel, and the link for it will be in the more information box down below. So thank you for tuning in to today's close to 15-minute video, and have yourself an amazing week. Bye-bye.